is Warriors Talk with your host, Lady ReShell.
Hello, hello. Welcome to Warriors Talk with author and founder Lady ReShell, where we move away from awareness towards action. It is Money Making Monday, and our topic is what to expect when buying a house. We are live on Intellectual Radio, and we want you to keep it locked right here and allow us to feed your brain. Our quote of the day is, if you include God in the decision you make about purchasing a home, He will not fail to show up and bless you in it. We're going to hear a word from our sponsor.
Greetings, I am Pastor Michael Richardson.
And I am First Lady Anastasia Richardson from the Emanuel Church of God in Christ. We're located at 3058 West Van Buren in Chicago, Illinois. We are building upon a solid foundation.
And we're inviting you to join us every Sunday morning on Facebook Live at Emanuel COGIC at 10:15 Central Standard Time. And you can also view our videos on our YouTube channel at Emanuel COGIC-MR. Once again, this is Pastor Michael Richardson
and First Lady Anastasia Richardson, and we're from the Emanuel Church of God in Christ. We are building upon a solid foundation.
I am so excited about my sponsors. They have been faithfully sponsoring this show for about 3 years now. So make sure that you check them out on Facebook, Emanuel COGIC. And here are your trending topics for today. President Joe Biden plans to sign restrictions today on travel to the United States to mitigate COVID-19 transmissions, according to White House officials. The ban would prevent most non-U.S. citizens from entry if they have been to South Africa, where the new strand of COVID-19 has been identified. The virus has killed more than 418,000 people and infected upwards of 25 million in the U.S. Biden is expected to reinstate the border restrictions that was in effect much of last year, but was rescinded by, President Donald Trump. By President Donald Trump. The limits would affect the non-U.S. citizens traveling to the United Kingdom, Ireland, and much of Europe. Also trending is teachers in Chicago public school system voted against returning to in-person classes. Today was supposed to mark the first day of school for the teachers, and on February 1st for the students. But the union said in a statement that 71% of the teachers voted that they wanted to stay out until they were able to get their vaccinations. And the teachers union said that the members chose safely. They are sparring with districts about how and when to return to the classroom. When we are not negotiating class size, benefits, or staffing, we are bargaining with minimum risk for COVID-19 infections and minimal risk of death, said the union. So if you have a child that's in the public school system, Chicago public school system, they are right now fighting so that they won't have to go back until they are able to get their vaccines, and who can blame them? All right, you guys, those are your trending topics. So I'm excited about the show today. The topic for the show, I know a lot of us can benefit from it if you don't have a house or if you want to purchase some property. So our topic is what to expect when purchasing a home. So I have a very special guest today. I'm excited about my guest today. I'm excited about the information that she's going to be sharing. And make sure you get your pens and your pads so that you can write this down. Share the show out to somebody else so they can get this information if you are planning on purchasing a house. She is a native of Milwaukee who has transformed her education and her career around real estate. She is a real estate broker in 4 states, in Wisconsin, Georgia, Florida, and Illinois. She is a real estate instructor, a real estate investor, a coach, a mentor, a trainer, a keynote speaker, author, and a new real estate developer, and much, much more. Warriors, help me welcome Tamairo Moutry.
Thank you.
Hi, how are you?
Oh, I'm doing fine. Just trying to brace myself to have to come back to that cold weather tomorrow. I have to leave sunny Florida. It was 84 degrees today. Oh my goodness.
Oh, wow. It's starting to come down lightly right now, so I could just only imagine what it's going to look like in the morning.
Oh boy. I'll have my boots ready though. I'll be there.
Yes, I think we're kind of used to it, but then again, you can never get used to this type of weather. So
I agree.
yeah. So I'm very excited about the show today. The information that you have, the wisdom that you have that you're going to be sharing is really vital to those of us who are thinking about purchasing a house. And we want to make sure that we follow the right steps. Because sometimes you can get into this process and it can be very discouraging, very depressing. And some people just forget about it altogether. So I want to make sure that we have the right steps to follow when we start this process. So the first thing I wanted to do is talk about, like, how did you even get started into real estate?
Well, I came from the teaching profession and my undergrad is in education. So I was an elementary school teacher. And my son was having some behavioral issues. And I asked God, I said, God, you're going to have to try to share with me and show me what I need to do to be able to get from out of this classroom so I can see about him, because it wasn't really feeling good for me to be teaching everyone else's kids, but I had problems with my own. So I started off becoming a landlord and a real estate investor. And when I bought enough properties to replace my teaching income, that's actually how I got started, by becoming a real estate investor and a landlord.
Awesome. So you mentioned landlord, and that would be my next question. Like, why should we purchase versus renting? Like, what's really the big difference?
So everyone has to start somewhere. I mean, obviously I had to start somewhere myself, but as a renter, you're not building any equity and you're not creating any generational wealth by being a renter. Unfortunately, the landlord is reaping all of the benefits. And don't get me wrong, maybe homeownership might not be for everyone. So I encourage any and everyone who can place themselves in a position to be able to purchase, they should do that. People seem to think that it's a really hard thing to do to buy a home. It's really not that hard if you put your mind to it and you get your documents together and you get your credit together. If you start adding up the rent that you're paying every single year, it will truly make you mad, because after so many years, you will see and look at yourself and say, hey, for all the money that I've paid out, I could have very well bought my own home. Oftentimes, the rent amounts that you're paying are actually higher than what a mortgage payment would be. So that's one of the main reasons why, even if you feel that you're not ready, you should start somewhere and at least see where you stand and start making steps toward a better tomorrow for you to become a homeowner.
Awesome. So what would be our first step if we decided, oh, you know what, I'm tired of renting. I want to take that money and put it into something that I can own? Like, what would be our first step?
Well, before we even get into the steps, I want to simply say this, that we need to actually make sure that we have our finances in order. And this is a good time to do that, only because it's tax time. And I know that a lot of people are getting tax refunds back. And this is an opportune time for anyone to use that tax refund to help them purchase a home. But of course, a lot of things go with that. So the first step would be, of course, that part, making sure that you have monies for down payment and perhaps closing costs. And one of the biggest things is checking your credit report. And there's all kinds of sites out there that you can use. A lot of people look at Credit Karma, but Credit Karma only allows you to get 2 of your scores. They use the Vantage scoring model along with some of the other sites, but we just use those as a guide so that we don't get hit with hard pulls when we go to these different mortgage lenders. So there's a site that I have everyone go to, and it's called www.creditcheck.total. It's www.creditchecktotal.com. That's one site. The other site is www.scoresense, SCORESENSE, scoresense.com. Those are two sites that you can pay $1 and you can pull your credit reports. Make sure there's no errors on there. Make sure there's no collections on there. Medical collections do not need to be paid. I'm going to repeat that again. Medical collections do not need to be paid. And you might be saying, why? Why don't I need to pay medical collections? Well, the lenders don't really look at those. It's one thing if they're a collection, and it's another thing if it's a judgment. Medical collections do not move the lenders. So don't spend your time trying to pay medical collections off. But other collections that are recent, that's another thing. Other things should be disputed. So, you go on there and you may see some errors. You may see some things that need attention. And there are places that you can go. The old way of doing things with looking at your credit and trying to dispute things is sending off those letters. And I'm not telling anybody that that's wrong to do. It still works, but there are other more effective ways to dispute your credit report. And you need to take note of this. There's an agency that was created some years ago called CFPB. CFPB stands for Consumer Financial Protection Bureau. Consumer Financial Protection Bureau. It's online. You can go there and complain, and people don't even know. There's a bunch of people that don't even know that this agency exists. They're looking out for the consumers, making sure that people are not erroneously putting things, these junk debt buyers is what they're called. Junk debt buyers are putting things on your credit report, and you really don't owe them. And they hate for us to know this knowledge, but I'm spitting it all out today so that you can start improving yourself, so that you can come to me to buy your home. You are not supposed to be paying any junk debt buyers, because these junk debt buyers buy your debts for pennies on the dollar. They're waiting for the creditors to charge your debt off. Once your debt is charged off, then these junk debt buyers come in and again, pay for your debt for pennies on the dollar. Then they turn around and say you owe them. But the truth of the matter is, when you make your complaint to CFPB, is you're going to tell them, I've never heard of this company before. I've never bought anything with this company before. And I've never signed a contract. They will never be able to produce a contract that you had with them. Because it's the truth. You never signed a contract with them. So therefore, they should not be collecting any money from you. And that is the complaint that you're going to put in for any collections that you see on your credit report. Now, that's just part one. Part two, listen, part two has everything to do with you making sure that you have some trade history. And there's a lot of people out there who don't have trade lines. And you might be saying, now, what is a trade line? Trade lines are things that report to the credit bureau. And if you don't have any, oh, well, I'm sorry, that's a bad thing. And you're considered a person that has thin credit. So when you have thin credit, that's kind of like a black eye, unfortunately, because the bureaus can't really report anything, and it doesn't really show how you make your payments. It doesn't really show good payment history. So in that case, you need to start getting some primary trade lines, things like credit cards. Oh, my credit is bad. How do I get a credit card? Even if you need to get a secure credit card, but there's things out there that are better than secure credit cards that'll make your scores jump up and become healthy. One of the things you can do is you can piggyback. This is free information, $1 million information. You can piggyback off of someone else's good credit. Hello, what did I say? You can piggyback off of someone's good credit. Needs to be a trade line that has been reporting for at least a year. It's good to have a 1,000 or higher trade line, credit line of 1,000, and the balance needs to be less than 30%, 30% or less. 10% is optimal. Piggyback, jump on as an authorized user. What did I say? Authorized user. And you will see a tremendous jump and boost in your scores.
Someone just asked, can you repeat the websites to check your scores again? creditchecktotal.com, www.scoresense.com,
SCORESENSE.com.
Okay, Mylea, if you heard that, can you put it in the comments so that if someone comes back, they'll be able to get it? Okay, and she also asked about student loans.
That was next. That's next on my list. I'm glad you brought that up because with student loans, this is a major concern and a major issue with a lot of our borrowers. They put us in a situation where our student loans are so they're so high that they disturb your DTI, which is your debt to income ratio. They all have to be in good standing. They made a new rule saying that they will use 1% against your debt to income ratio when buying a home. And this is actually hurtful to you. So if you have $50,000, $60,000, $70,000 worth of student loans and they take 1%, that's a $500, $600, $700 payment. Obviously, the higher your scores are, the better your situation, only because you can go to the income-driven repayment program. Income-driven repayment program. Go online. And if your loans are not consolidated, this would be a good time to do so. Get that payment down, get a payment letter from them, and that will reduce your payment, but you probably will not be able to go FHA. FHA, Federal Housing Administration for first timers, you probably won't be able to go FHA because they don't recognize the income-driven repayment program and they still try to use that 1% against you. You cannot have any loans in deferment that say zero. It's not going to work. If your payment shows zero on your credit report, they're using 1%. So if you don't do what I say and go to the income-driven repayment program and get that all squared away, you have problems, speak to a supervisor. That's the only way that you can get that reduced.
Have you ever heard about the Freddie Mac using 0.5%?
No. All I've been hearing is that the only way that you can change that payment amount is by doing that income driven. And what they're doing is they're looking at your income, and based on your income, they come up with a number that they figure that you can pay instead of that 1%. And if you have that letter, then that is the way that the lenders will not use that 1% against you, so that your debt ratio won't be over.
So we can only use that with the conventional, not the FHA.
Yeah, I believe that they won't let you use it with FHA. I believe they're only letting you use it with conventional. And some lenders do have different rules, so don't completely quote me on that, but at least you'll be armed with education. So whatever lenders you do choose, which if you work with me, I have a myriad of different lenders. And I did just pass my national mortgage licensing exam in December, so I will be starting a new mortgage company. Thank God. I had a mortgage company back in the past, and I'm just not happy with what I'm seeing with these lenders helping our people. So I decided to come back to this side only because we need to do more to make sure that we create more homeowners. And I read an article a long time ago where they were saying that people were doing things wrong. And the things that they were doing wrong is not helping people fix their credit for free. And I used to charge. And I figure like this, it seems like the more people I help for free, the more people come to me for business. And everything doesn't always have to be about money. There's some people that can't piggyback off of people, but there's other ways to fix the credit to get you where you need to be. But you got to make sure that all those payments are on time, people. All you have to do with a lot of your bills and credit cards is go ahead and let them take it, people. Get it on the automatic draft. Get it on the ACH withdrawal. We're busy people. You may forget. At least you know that minimum payment is being taken out. That's a very good tip to try to help you stay on the right track to make sure all your payments are being paid on time. You don't want a 30-day late. You can drop your score 100 points. So do what you need to do to make sure that you keeping those payments paid on time. Very important.
Okay, so it's very important to pay them on time. Now, when you miss a payment, how long does it take to make it up on your credit report?
Oh boy.
Just like one payment.
Wow. To be honest with you, it kind of never gets made up. That mark is there for 7 years. That's why it's crucial that any and everybody knows that you have to be on top of these payments. You can be late, but never 30 days late, because that's when they report you. Now, let's just say you probably sitting there saying to yourself, well, oh my God, I got 30-day lates that I had because I had a job loss or whatever. However, there's something called goodwill. And maybe you don't know what I'm talking about, but again, that's why I'm here to educate you. You can get something that's called a goodwill letter. And that goodwill letter can be sent to that creditor. That creditor may actually remove that late. If you have been a good client, a customer for a while, you can send a goodwill letter to them asking that they remove the late payment. And a lot of creditors will do that. You know, you can work out something, ask a supervisor, call in about it, and send something in writing to them. And there are all kinds of templates and letters right online that you can copy and send in. This is not rocket science. It's just that people don't know what to do. And you know what? You don't know what you don't know. People used to say that to me before, and I used to be like, what do they mean by that? You don't know what you don't. Well, you don't know what you don't know. But it's called a goodwill letter. And that's the way you can get late payments erased from off your record.
So there are some things that we can do before we even start the process of trying to get the house, that we could do on our own to just get us in a situation so that when we get to that step where they're pre-qualifying us, there'll probably be like minimum work that we have to do.
That's true. And it's not that bad. You know, and the other thing I want to tell everybody so that they're not overwhelmed from the beginning, what you need to do is pull all your documents together and put them in a folder. What they ask for are your last 2 years of tax returns. They ask for your most 2 recent pay stubs. They ask for your driver license or ID, your social security card. If you have any social security payments coming for your kids or disability, people think that because they're on disability that they can't own a home. Nothing could be further from the truth. Anything some people can say to try to stop you, they will. Child support can be used. Survivor benefits can be used. Retirement funds can be used. Your 401k, if you have 401k from your job, you can use that for down payment. There's so many things that you don't know that can be used for income to help you qualify, as well as making sure that you get all of that stuff together to make you look like a more viable candidate. The more you give them, the more income documentation you give, the more stable you look. They look for a 2-year work history. It's very important. They don't like to see a lot of job hopping. They don't like to see big job gaps. Job gaps after 3 months, they better have a really good reason. One of the good reasons is COVID-19, having a child, maybe you got sick, something like that. They're starting to ease up a little bit on that, but just make sure that you have a 2-year work history. That's crucial. I always tell everybody to have at least $5,000 saved up. That's at the very least. If you have more than that, then you are ahead of the game. Tax time is rolling around. You may have 10 come tax time. And again, 401k, retirement income, stocks, bonds, settlements. Some people have settlements from accidents, or maybe they're inheriting money, and maybe your family member can help you with down payment and closing costs. That's actually allowed with FHA. And the sellers can help you with closing costs as well. Closing costs, down payment is 2 different things now. Down payment, closing costs is 2 different things. Those are your fees and those are your costs. It's not the seller's costs. People think, oh, well, the seller has to pay. That's not true. Those are your fees and your costs. Can the seller help? Yes. And you can get 6% seller concessions with FHA. Conventional, you can only get 3%. VA for military is only 4%. And they all have different rules. VA and FHA loans are loans that are a little bit more strict on the homes, making sure there is no peeling paint, and you can't have a lot of major cosmetics wrong with a home when it's FHA or VA. They're a little bit more strict, and they like the homes to be more move-in ready.
Wow. Okay. So my next question is, when you're going to be pre-qualified, so they're going to look at your credit, they're going to look at your employment. You got to have the money in the bank, and you have to have the money in the bank for how long? Because I know there's a period of time that it has to be there, right?
Right. What it's called is sourced and seasoned. Source, where did the money come from? Season, how long has it been there? They like to see it sourced and seasoned for at least 60 days.
Source and season for at least 60 days. Okay. So how long does the whole process take? Because I know some people think, they get discouraged by, it may take like 6 months. And some people say, it took me a short amount of time to close. So does that vary on the type of loan that you're going to get or the company that you go with?
Well, it's a little bit of both. I'm glad you asked that question. It's actually a little bit of both. Some companies work quicker than others. It depends on the type of volume that they have coming in and out. The other thing that's been holding things up since I'm doing this every day is the appraisers. And you might not know what an appraiser is. I'll go over that with you in a moment, but these appraisers are backed up because there's so much home buying activity. And don't forget, there's refinances, and refinances is when you can pull equity out of the home and get money or lower your interest rate and term, or cash out refinance. Those appraisers are around to do all of that. Plus they have to do the purchases too. An appraiser, that's one of the most valuable people in this process. And what they do is they come out to the house to make sure that you're not buying a lemon. It's sort of like a mechanic when you go to, turn your car in to get it checked out. They're checking out the house to make sure that you're not buying a house that's overpriced. So, okay, we got the inspector and we have the appraiser. The appraiser is making sure that you're not overpaying for the house. So when that appraisal comes out, sometimes the appraisals do come in short. And when that happens, then we have to go back to the negotiation table. So appraisers are running behind, and that's what's been holding up some of the deals. It depends on if we have encounter any hiccups with the buyer. Sometimes buyers have hiccups. They find things on title. They have to run title on you as a person. They need to see if any judgments show up against you. If it is, there's people that have different name variations. Those different name variations, you have to prove that that's not your judgment, because they can't have anything going against the house that you're buying.
Is it necessary to get title insurance?
Yes, because again, that helps you to make sure that you're not buying a home that has liens against it.
Wow. Okay. If you are just tuning in, we are live on Intellectual Radio. We're talking about what to expect when buying a house. And so we are given some information that we can use to help get us set up in the process. So if you're trying to get a house within the next 6 months to a year, then here's the information that you need to get you started. You have to be employed. You have to have money in the bank. Your credit has to be intact. So if you have any issues with your credit, this will be the time to address them. And she has given us the scoresense.com and the creditchecktotal.com. And she's also given us, what was the other one? The
CFPB. Yes, ma'am. Mm-hmm.
These are that's the place where you can go when you can address any type of collections that you have. And also the Goodwill letter. They have samples on the internet, and you can have the template where you can put your information in there and you can send it to try to get some of the late payments removed off of your account. So there are things that we can do to get ourselves ready to purchase the house. You just got to be able to do the work. So everything is not going to be done for you. There's some things that we're going to have to do as the person that's trying to buy the house to get us ready. And I know this process, it seems so intimidating to even start the process, but I know that it's worth it in the end to have something that you own, something that you can pass down to your children, and also something that can actually get you started into getting other pieces of real estate. It could be, set the tone for you if that's what you want to do.
I agree 100%. One other thing that I wanted to bring up, since you were bringing up those forms again, is there's also a template online. Look it up online. It's called it's an inquiry removal letter. A lot of people have problems from people pulling their credit, trying to see this and see that. car places. If you went to go and buy a car and you got a bunch of inquiries on there, there are templates online, just like the Goodwill letter, that will allow you to have creditors to remove those inquiries off of there, because my understanding is they are not supposed to be leaving inquiries on there if they didn't actually grant credit to you. So you need to do your own research. Stop paying all these people to clean your credit off when you can do it yourself. Again, I said stop paying people to do your credit. You can do it yourself. People think that they have to pay a credit repair person. They don't know what to do. They don't know how to do it. All this stuff is right on the internet. If you do enough research, go to YouTube, go to Google, you can fix your credit yourself. I'm giving you information that I've been using for the last 16 and a half years. I've been in this field almost 17 years. And one of the reasons why I got where I am today is because someone scammed me. So I said, well, I need to make this negative into a positive. And it made me become a credit expert. Stop giving your money away. That money can be used for you to save, for you to pay for an appraisal. You have upfront costs. You have earnest money. Earnest money is almost like a security deposit. That's the money that you give once you get ready to get your offer accepted. Once it gets accepted, this is your money saying, hey, I'm taking your house off the market because I want to buy it. That's the first thing first. You're going to need at least $1,000 for that. Second thing you're going to need.
So I'm sorry, you put in the offer letter first and then give them the money, or you give them the money and then do the offer?
Nope. They have to get their offer accepted first. So the agent broker has to write the offer, get it accepted. Then they have a time frame to turn in the earnest money. That could be anywhere from 3 to 5 to 7 days. Turn that earnest money in. That's $1,000. The next step after that is your inspection. Should you get an inspection? Hey, I'm going to say it depends. I would urge people to get a home inspection, but there are some clients out there that are really savvy and they don't want to compete with everybody else because they might want their offers to look better. So if they get an inspection, that might be something that may deter a homeowner from choosing your offer. If you know that you're handy and you can fix on houses, maybe you don't want an inspection. But if you're a first-time home buyer and you're a little bit leery about the process, you get that home inspection, because the home inspection, again, is like a mechanic fixing on a car. The home inspector is coming to see what's wrong with the house. They're telling you for your own information, and this is a negotiation tool. You can come back to the table, ask the seller to fix these things. You can meet somewhere in the middle where they can fix some of the stuff, fix all of it, or they might say no and not fix anything. We're in that kind of market where the sellers are getting their way, and you have to make your offers competitive to play in the game. I mean, and I hate to say it that way. Last year, I was writing offers $20,000 over the asking price just to try to get a deal done. So I need to let everybody know that you're in a competitive market. You can't give up, because if it's the one thing that's worth fighting for, that is home ownership. You don't want your money to keep getting flushed down the drain like a toilet. It's really not worth it. You're not gaining anything. Yes, you need a place to stay, but it's not yours. And you should be on the lines of buying multiple homes. You have children, buy 3 houses if you have 3 kids, because those homes can help each one of those kids through college when it's time. And then all of them will have a home. Mm-hmm.
That sounds like the smart thing to do. It does. Okay, so what's the difference between, Sandy said good information. What's the difference between going through the loan officer and going through the bank, or is it the same? Like, it's a process.
Wow. Wow, I love these questions. I don't know where you're getting them from, but it's just, they are just everything. How do I address this? I don't want to be negative toward a bank, but let me explain something to you. There's a difference between going to a mortgage broker and to a bank and to a credit union. Credit unions and banks, they don't have as many products as a mortgage broker has. And a lot of people used to frown at mortgage brokers, but now today, lots of people like mortgage brokers, because guess what? They're a lot more flexible. They're a lot more flexible to your needs. Mortgage brokers play a big portion of, helping you to identify what program to put people in. I have different lenders that I send to people based on their situation. But if you go to a credit union or a bank, they may not be able to cater to everybody's situation. I have lenders they go all the way down to a 580 credit score. The middle credit score needs to be at least a 580. And I have other lenders where they can't underwrite or get anybody through unless their middle score is a 620. So if I have a person with a lower credit score and I know that it's going to be a little bit difficult for us to try to boost it up, I take it to the lender that I know will go down to a 580. People who have much better credit, higher credit scores, I put them in programs where they can get 100% financing. One of my buyers, he left the table a couple of weeks ago. He left the table with a check. He didn't bring nothing to the closing. That lender that I took him to had a 100% financing program. He had high credit scores. And I have to say, the credit union that he went to denied him. He was a teacher, good income, good work history. I don't know why. I can't explain it to you why they denied him. But he came to me. I took him to one of my preferred lenders and they got it done. And he left the table with the earnest money that he paid up front. He left the table with a $2,000 check. I don't know.
So what should our credit score be when we're going in to try to get pre-approved?
What I normally tell people, because those sites that I just gave you, they seem to operate off of the Vantage score. Every now and then they match up, but a lot of them don't. There's hundreds and hundreds of different credit scoring modules out there. And you don't know which one is really right until the lender actually pulls. So it's again, good as a guide, but I tell everybody, try to get all your scores at least in the 600s. So if they do pull and they happen to pull a 580, you're still there. Other couple of things that you need to remember with these upfront costs, because remember, you got upfront costs, you got the down payment, and you got the closing costs. The upfront costs, earnest money, inspection, appraisal, and you have homeowners insurance. Some people may have renters insurance. You need to convert that into a homeowners insurance plan. You're able to get maybe a discount for having auto insurance. So you want to bundle your homeowner's insurance and your car insurance together. Let's talk about pricing. The pricing for these different things. I said $1,000 earnest money. I said inspection. Inspection could be $350 to $450. I hope y'all writing this down because you got to remember this stuff.
Okay, I have a question before you run down the prices. Does this have anything to do with the $5,000 I got in the bank, or is this additional?
This can be intertwined because what will end up happening is they're going to give you what's called a loan estimate. It's good to just have $5,000. Some of this will go towards your upfront costs, and you will be receiving some credits when you get your loan estimate done eventually. But for a rule of thumb, I just say have $5,000, and some of this will be used up front. Not all of it. You don't need every single penny up front, and you can get what's called a gift. You get a gift letter. A family member may be contributing to this too as well. Rule of thumb too is just to have as much money saved as possible. The more money you have in your accounts, the better you look as a person to them. That makes you look more stable. Your tax refund can be used. If you have paperwork showing that what you're getting back, that's good for them too. They know that that's coming. You know, you have your work checks coming in, you're turning in pay stubs. That's going to help out too as well.
So we're paying for the appraisal?
Earnest money.
Earnest money. And the inspection is different, right? Different from the appraisal, right? Those are different things. The appraisal, the inspection, the earnest money, the insurance.
Homeowners insurance,
Insurance. What else we got?
That's it for the upfront costs, really. But the main two things that you're going to need upfront once you get an accepted offer is your earnest money and your inspection money. And so we're talking about between maybe $350 and $450 for an inspection, $1,000 for the earnest money, appraisal between $450 and $550, And it differs if you're getting a multi-unit, like a duplex or multi-unit. By the way, you can buy a multi-unit for your first one, and you can get like 3.5% down or 3% down with some of these programs. People don't know that. They don't want to tell us that. I don't want to get into too many specifics about who they are that don't want us to have or don't want us to know, but you can buy multi-units, duplexes and things like that, and multi-units. If you can qualify for it, yes, you can get a 3 and 4 unit, 2 unit, 3 unit, 4 unit for your first home. You can.
So go ahead.
It's one more thing that I wanted to tell people about, because this is also what discourages people. This is so huge, and I'm glad that I just thought of it. Maybe that's just God telling me, hey, you better make sure you tell them that. And that is, you can purchase a home inside of a Chapter 13. Hello? What did I say? You can purchase a home inside of a Chapter 13. If you are in bankruptcy right now and you've been in it for at least a year and you've had on-time payments, you can purchase a home inside of a Chapter 13.
Wow. So we really don't have an excuse, really.
People don't know. Couple of more things. You can buy a home if you have a tax lien. What did I just say? You can buy a home if you have a tax lien. What else? You can buy a home if you owe child support. What did I say? You can buy a home if you owe child support. You want to know what it takes? You have to put yourself on a payment plan and show that you are making payments. If you show that you're making payments on it, it will and it can go through, provided that you meet the other guidelines that they have in place for you in order for you to qualify.
So my next question is, so what we have to put down, I saw it on your page, for the FHA is 3.5 and for the conventional is 5%. Because I think a lot of people think it's more than, I see 20% a lot with conventional, but it's actually 5%. So
for an owner occupant, conventional can be even as low as 3% if a person can qualify. There's a lot of lenders that have grant programs available too. One of the lenders I do a lot of business with is Associated Bank. Believe it or not, they have a lot of money. Okay. I hope y'all writing this down now. Don't have me talking for my help. I want y'all to write this stuff down. Associated Bank. I work with a lady named Tamairo Moutry, and they operate in many different states. Illinois is one of them. Very popular. They have a lot of grant money, and I know one of the grants is at least $4,000 for that conventional loan program. It's an in-house program. I do believe you need to have either a 620 or a 640 score. I try to stay up on top of these programs to help my clients. And that's for a reason, because remember, if your credit score is not there, I can't help you buy a house. So that's why I don't mind telling you what you need to do it. And, you just need to be loyal, because, your word is everything that you have. And when you have somebody like me helping you and then you go and work for somebody else, that's not right. So stay loyal, people, because people don't have to take their time to help you. It's a lot of people, when they see that you're not ready, they go the other way. You are at the bottom of the totem pole. You are at the bottom of the pile, and they are not going to fool with you. They're looking to go to the next person. So again, you bringing up some important points, ReShell. The questions that you're asking, you're asking all the right questions. People need to know that brokers work a lot harder for you because they have more programs to match up with the borrowers. The banks, you have to take what they're giving you. Mortgage brokers, they have all sorts of programs, and some of these banks also have some programs that other banks don't have. So you need to be mindful of that. And you need to rate shop. I tell everybody, work with 3 different lenders. See which one is going to give you the best deal. As far as credit hits, people are worried about credit hits, credit pulls. As long as you are rate shopping between the first 14 and 45 days, you're fine. It only serves as one hit. When you go outside of that 14 to 45 day window, then that's when you start getting a hit for these inquiries. Especially if you have different industries pulling, like a credit card company, a car place, and now you're trying to buy a home. That's what impacts the score and brings the scores down. If you're rate shopping, that, however, does not happen as much. You won't have much of it.
So we should be rate shopping when we are wanting to be pre-approved, correct?
With at least 3 lenders, you should. You need to see what's out there. Which lender is going to give you the best program? Some lenders, they don't operate the same way, and you may get more house with another lender. You might get pre-approved for 150 with one lender, and another lender might turn around and give you a pre-approval for 130. Another lender might give you a pre-approval for 110. One of the interest rates might be 3.5. Well, you might go to another lender and they'll give you a rate at 2.75. Those are things you need to consider. And you also need to consider the down payments that you're making. Are you able to get 100% financing? Are you able to get a gift, of equity from your family members? Are you able to participate in the programs that they have for the grant? And of course, you have to be able to qualify for those programs. They do have guidelines that you have to follow. You have to follow fall in the income guidelines if you are eligible for any of the grants.
Your score has to be at a certain point too, right?
That's true. Some of these programs, you have to have at least a 620 or 640 score. And again, those are lender questions that, you need to know. What does my score need to be in order for me to qualify for that program? You also need to make sure that you fall within that income limit. They look at your household size. They look at your yearly salary or your yearly income. You need to be asking the right questions. It's easy for anybody to just give you something. One lady came to me yesterday, said that the lender that she went to, I don't like that lender. Anyway, she was given a pre-approval letter, told her that she was pre-approved for $130,000. You want to know the letter that she gave her? $112,000. So if she's pre-approved for $130,000 and she gave her a loan amount of $112,000, how much money is that saying she needs to put down? $18,000.
Wow.
That's ridiculous. I told her absolutely not. I asked her what her middle credit score was. She said 653. I said, oh, no, ma'am. And she was like, well, I was wondering why. I said, listen, hon, you are not supposed to take the first deal that a lender gives you. I said, here's the name and number of a couple of more lenders. You need to try them so you can see what they're also offering. 3 is enough. You don't need to be going to 4 or 5, 6. You don't need all those credit hits on there. Again, more inquiries. We don't want to see inquiries. They give an impact on the score. We don't know how many. Sometimes it could be 5 to 10 points. We don't want to see that when you're trying to buy a home. It's just not good.
So, Tamairo, tell us about some mistakes that we make when we're in this process.
Ooh, Lord, I am so glad you brought that up. You cannot start thinking that you got this under wraps and start going to no furniture stores and letting other folks pull your credit and co-signing for folks. Don't co-sign for nobody. Tell them you love them to death. Don't co-sign for nobody. Please don't ever do it. You will be sorry. You can't have no NSFs. You know what NSFs are? You can't have any non-sufficient funds. You can't have overdrafts and stuff in your account. Get yourself together. If you had overdrafts, don't turn them bank statements in. Wait until you're ready. They don't like to see that. They don't like to see any late payments after a bankruptcy because they feel like you're falling back into that same pattern. Once you come out of bankruptcy, you need 2 years out of that bankruptcy for you to purchase. Okay. You need 1 year out of a Chapter 13. Somebody came to me last week. They were listening to other people. Oh, you can't buy a house inside of a Chapter 13. You got to wait till you get out. A lady came to me, Tamairo, I'm ready. Come on, get me pre-approved. I said, yeah, my bankruptcy was just discharged. Oh, really? Sorry, you got to wait a whole year. So don't go trying to get hard hits if you know you're not ready. Don't start getting your credit pulled until you got all your documents and everything together. It's just so many things that people are doing and not turning in all of the paperwork that they ask you to turn in and turning in different bank statements that you didn't. I got to give you an example. I had a couple that I was working with, and they were all just everything they were doing was kind of jacked up. And when I say jacked up, I mean that they were not forthcoming with a lot of information. Your loan officer is just like the FBI. You got to tell them everything, because if you don't, they're going to find out anyway. Don't try to be slick with these people. They're going to find it out. Okay? Don't say that the judgment don't belong to you when they have information saying that it's pointed straight to you. It's going to come out. So it's best to be honest and truthful up front so we can work through the issues to make sure that we can help you get pre-approved. Otherwise, you just wasting your time and everyone else's. No mattress money. You can't go take your down payment from under your pillow and think that you're going to be able to buy a house that way. No. Again, sourced and seasoned funds. When you're trying to do your earnest money, they need to see it coming out of your account. A lot of them want to see the canceled and cleared check. Make sure you're doing everything out of that same account, the same accounts that you turn in, that they can verify all of that. They're going to be verifying stuff, and they're going to pull your credit. They're going to pull your credit before you close. So don't go trying to buy no doggone car before you, baby, you can't live in that car. People have done that before. They have tried to buy a car in the middle of buying a home, and it just knocked their whole debt to income ratio over. Don't try to get no furniture, try to finance no furniture before you buy the house. Mess around and have the furniture and no house, because now you don't qualify for the program because you're trying to get credit cards and you try to buy stuff in the middle. Wait until you close. The day you close, then go finance your furniture. Then go finance a car. Don't do that stuff in the middle of you trying to buy a home. Don't start doing these disputes and then going and trying to get pre-approved. Your disputes have to be finalized. The loan officer, once he pulls up your credit report and sees these disputes on there, that causes problems. It's a long list of stuff that you shouldn't be doing that your loan officers should be telling you. But a lot of them don't. They own to the next deal. They just shoot your letter off and they don't tell you nothing else. Thank God I have a mortgage background and I'm able to school my clients a lot better. And that's another reason why I have so much business, is because I have both sides of the spectrum. And they know that I know what to tell them and they feel more comfortable speaking to me. But truly, I'm doing both of their jobs because they weren't told that they need to go get their earnest money out of that same account. They didn't know that they couldn't get $500 out of the bank and $500 from, under their pillow and turn it in. Because now they chasing back, trying to find out where did this other $500 come from. And these are hiccups where you have to start writing letters of explanation. And
this information.
we just don't want that big song and dance.
You have given us so much of your wisdom. And everybody who walks away today should be able to have a great start on what to expect in the home buying process. And right now, I want you to just tell everybody how to follow you and how they can join your groups as well.
Okay, so I'm on just about everything. I'm on LinkedIn, obviously on Facebook. Facebook is my jam, everybody. I'm on Facebook all the time. You can come and reach out to me on my personal page. I have a public figure page. It's under my name. I have several real estate groups. My biggest one, my largest one is Women in Real Estate. I have Tamairo's Credit Clinic. And I have the 6-month home buying challenge. People, don't blow your money. Don't blow your tax refund. Get ready to buy that home. You won't be disappointed. There are home warranties that'll protect you, and you can pay for a home warranty every year. So that'll stop you from you having to make large repairs. Those things come into play and they help you out a lot. People worry about concerns about repairs to the home, but you can get a home warranty to take care of that. You paying out more renting. I'm telling you that now. So again, Facebook, Instagram. I have business Facebook pages for each one of my companies. For Illinois, it's Illinois' Best Real Estate Services. That's my company name. And I'm just looking forward to hearing from all of you.
Awesome. Thank you so much, Tamairo. You have been tuned into Warriors Talk. We've been talking about what to expect during the home buying process. Join me next Monday right here on Intellectual Radio at 6 p.m. As always, Warriors is changing lives one warrior at a time.
Thank you for listening to this week's edition of Warriors Talk with Lady ReShell. To find out more about Warriors Talk, Follow at Warriors Talk, the number 1, on all social media outlets, and Warriors Talk with Lady ReShell on YouTube. Please join us next week and every Monday evening at 6 p.m. Central Standard Time on intellectualradio.com for Warriors Talk with Lady ReShell, where we encourage, educate, and empower you into action.